Guys, what's going on? My name's Ryan. I trade ETFs and I like to make videos to show some of the technical analysis that I'm seeing in the market. So we've got GDX here today representing VanEck Gold Miners ETF, and let's get started. So what do we have here on the daily chart? This is a daily chart capturing the last 6 years, going back all the way to 2011, and the first thing we can see is that we have this important overhead resistance line that has been holding us up this entire 6 years here. Next interesting thing that we have here is this kind of horseshoe pattern that I've drawn out here. It's not really a legitimate technical analysis pattern. I just like to show it, I guess, because it's what I'm seeing as more of a curved support and resistance over time instead of a straight line support and resistance. And you can see it's kind of held up pretty well. If we just draw these lines, and if you imagine that it bounces off these lines, it kind of does a good job of, tracking the price movement, and perhaps we could draw this closer to something like that. Anyways, that's just kind of a side note thing to keep in mind, but let's go into the lower time frames here at the 2 hour. So here in the 2 hour, we can see some very interesting things starting to play out. We can see that we are kind of in this upwards channel at this moment. This kind of goes along with the curved pattern, the horseshoe pattern that I showed above. But we had a large rise into this, and we got rejected off of this 6-year resistance level. We came back down, and we set a pattern, which I originally thought was a symmetrical triangle. I have since changed my analysis ever so slightly. However, I wanted to keep this on here because it was my original prediction. My original prediction was that this was a symmetrical triangle going into price, and this would be E right here as we're coming down. This is a pretty major support line. This is a 2-year support line, and I think that we're going to see some interesting things play out here, but we'll get into that in the shorter time frames. The new pattern that I'm seeing is more of a descending triangle, and like I said, we'll get into that in shorter time frames. One interesting thing to note is our time fib levels here. I just drew this from this high to this low down here, and these series that it spits out are just the symmetrical, and the lines that it spits out after that are just equidistant to what this is. So we have kind of a halfway move, and then our bottom, then we have a bottom, and then we kind of have this top here, if you want to call it a top, and then our next one comes here. But what's more interesting and perhaps substantial to note is what happens in the center of these. We can see that we had a large move come near the center of this move, and a large move come at the center of this move. There's kind of a continuation in the center here, and this isn't quite the middle, but you get the point, is that we're approaching the center over here in between these two, and along with my predicted price path, I think that once we hit the center, we might see a reversal pattern of some sorts. Anyways, let's get into the 1 hour. The 1 hour is where most of my analysis lies, I guess. I wanted to just briefly go over and talk about what the descending triangle pattern is. This is coming straight out of, this description is coming out of Bulkowski's pattern site. It's a free website, and it's where I've learned a lot of my stuff. He's been trading for a number of years, and he's got a full dictionary of technical analysis that you can basically dive as deep into the Mariana Trench as you want to go. But basically what he has, the important points for his descending triangle, is that volume is supposed to recede 83% of the time, and if volume slopes upward, the pattern performs better. The breakout typically occurs 64% into the move, but the most powerful occur 80% of the way to the apex being when this support and this resistance line conjoin here. This is the apex. A continuation is that prices that rise into the pattern break upwards 73% of the time. We can see here that our price moves upwards into the pattern. For trend, you want to look for triangles with upwards breakouts near the start of an uptrend, because descending triangles near the end of an upwards trend tend to perform much weaker. They are used more to get out of a rut of a downtrend, which is exactly what we have in the price action here for GDX. Anyways, so with this price moving into the pattern, we come up and set our first resistance level. We come down, set our first support level. This first support level is A, B, C, D, and we have to come down and set our E. But typically you have 3 moves on top, 3 moves on bottom, and that would complete our pattern as far as touching both sides, both support and resistance sides, the appropriate number of time. Here we can see the time fib that I drew here. I drew a new one from this low to this low, and then this is what spat out for the equidistant length of this here from A to C, and this is where I decided to plot my E point. taking into account that the breakout typically occurs 64% of the way towards the apex, again, the apex being this, I just drew a simple distance here, and I got 1,456 bars. Then I multiplied that 1,456 by 64% and got 932. 932 comes to where this light blue line is right here, and this would really make sense as far as the overall pattern that we're seeing playing out here goes. As far as the medium-term future goes, I kind of expect us to bleed out over here past our E a little bit, and then shoot back forward, back upwards, and get rejected at this resistance line, but we're not going to get rejected like we have in the past, where we came up, we just touched it once, and then we waterfalled back down. We see this happening 3 different times here. I kind of expect us to flag out here, and this flagging out is kind of a surefire way that prices are going to continue and break out. I've seen this in a lot of different patterns. I will change my analysis if we come up and touch this top and get rejected immediately, of course, but this is just kind of what I'm expecting as far as the pattern continuation and 64% of the move into the apex for a descending triangle kind of goes. This is just my theory for right now. This will obviously probably change over the course of the next month, but it's just what I'm predicting for right now. The reason I think that we're going to bleed all the way down to this support line is because we can see that when bears kind of take control, which is what I think that the situation is right here, you can see that they don't really let off the brakes until we hit this kind of line in the sand that the bulls have drawn, which is about 21.15, and towards the end of this, we can kind of see that price slides a lot more. We can see this even more from our B2C move, where price just kind of bled out. And I think that we're kind of seeing the start of this again. We see that it starts to bleed out at about the same exact level each time, right here, and we're starting this one right here. So I don't think it's going to be a straight shot down. I think that we're going to see a lot of choppy action downwards for the next couple weeks before heading higher, of course. So let's move on to the 30-minute time frame. On the 30-minute, we have some interesting things going on here. Let's zoom in a little bit. I called this, I think it was last week, pretty well, and I was pretty happy with myself. I drew the measured move. I saw this was a descending triangle here. We had our impulse wave for an Elliott wave. We set our 1, 2, 3, 4, 5. This 5 was now resistance, and this level down here was support. We come down and set our support. A, B, C, D, E. It's kind of tricky because this was like a false breakout right here. We see that this resistance holds up very well right here, 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 here. Then we break out above it, and what I originally had is I had my A right here, and then B, C, D, E, and it actually came out. Then it actually came to be a false breakout. We fell back into the trend, and once again we were supported here, and we shot up. And what was more notable, and what I was actually happy with, is to see that theory actually came into play here. This measured move here from the support to the top of our resistance line, you're supposed to draw that to the point of breakout. And so by drawing that, I just cloned it. You can just clone these here, and you drag it to the point of breakout, and that was our full move for this bullish jump up here to D. Since then, we have certainly lost all of that gain. We came back down here and set in an A. You can say that this is, where our previous support line was, this A point, and then we shot back up, set our B, and then we fell back down, and I think that we're setting our C right now. One thing that I wanted to note is divergences here on the 30-minute. We can see our slow stochastic creep upwards, as well as our CCI creep upwards. Our CCI is the commodity channel index, and it measures volume, and the slow stochastic measures momentum. So looking at this, we can see that we have a higher low going into our slow stochastic and a lower low in price, and a higher low in our CCI and a lower low in price. So these are divergences that are playing out right here, and you can just you can just wave these divergences off pretty easily if you want, especially on a 30-minute time frame. However, I do find them quite significant in trading, since I am a shorter term trader than most. And the reason that I have other blue lines drawn is I wanted to show other situations here in recent history where the divergence came out to be true. So here we have higher lows in our stochastic, and here we have lower lows in our price, and what happens is we kind of shoot up even further. And over here, we have a higher low in our CCI and a much lower low in our price. and we get this nice little bounce play right here. So with this, we see both of them occur here. This wasn't exactly the case in the other two examples, but I think that this divergence will lead to a short pop, which from a technical analysis perspective would make some sense. I think that if we get a pop, we might see something like this, and we would come up and test this previous support. Support becomes resistance, and I think that we could see ourselves falling back down even further from there. But I would be interested in seeing this move just because I am holding shares of some gold miners right now, and I'm looking to exit them when we hit resistance at that level. As far as near-term targets go for entries, I have two targets that I'm going to be buying shares of GDX and JNOGAN. First one comes here. It was my original prediction that this is a symmetrical triangle, and it's interesting. You remember this light blue line here? This was our 64% of the descending triangle. It comes almost perfectly right at the apex of this symmetrical triangle right here, so I think that's interesting to note. My second target, and where I'll be fairly aggressive on my trades, is right here at E, which is the final move of this descending triangle. Again, this big bold black line is support for the last 2 years, so I'm very interested to see what happens here at this level, whether we get, I'm guessing that we get supported here briefly. What might happen is that this divergence is going to be ignored, and we're going to continue to fall into this support zone right here, and then we're going to see our pop, and then we're going to see one last leg down, and then we're going to follow up with our bullish run up here, flag out, and then we're going to break out finally. So that's just what I'm seeing in GDX. Let's go back to the hour time frame. So that's what I'm expecting for the short term, medium term, and long term for GDX. If you liked this video, please like and subscribe for weekly updates. It really helps me out a lot. And good luck with your trading on GDX and gold miners next week. Thanks. Bye.